Welcome back. You're watching Trade of the Week with me, Zinati Guma, and I'm joined by founder of Henrenya Capital, Petri Redelinguys, who will be kickstarting the year with a technical analysis on the JSE Top 40 Index, Fields as a buy as well as MTN. Thank you so much for your time, Petri. I think what we keep on referring to is the bull run that we saw at the end of last year that hasn't really filtered through to the beginning of this year, particularly with the JSE being influenced by global drivers, not really what is happening here at home as people have been coming back to work from the holidays. But even, that bull run that we saw at the end of last year and the kind of little spikes that we are seeing this year, as we are seeing red screens broadly, those rallies have been concentrated and it hasn't really been a broad bull run. And I'm actually wondering how the top 40 has fared throughout all of this.
Well, so far we're down around 3,000 points for the year.
Ooh,
so that's just a little shy of around 3%, somewhere around there. So it's been a rough start. I think. Also, what I think has been a bit of a hallmark so far this year, and I guess it is only the 15th, so a little bit of patience, is the market is dead quiet in terms of volume traded. Even this morning, by sort of 9:45 this morning, 9:30-ish, we've done 100 million for the day, which sounds like an enormous amount of money, but really is not, right? If you take a bad day that I'll sit and complain about how bad it is, we do 9 billion rand a day. 100 million every 30 minutes is really very, very, very quiet compared to that, right? So it's been a very strange time, I guess, in markets, and we haven't really seen I guess a lot of participants coming back. We did see the US market is kind of ticking closer to the highs. Our market not doing too well. A number of things. I think South Africa is very good at scoring own goals. We're at the ICJ or whatever the acronym is. Making all sorts of allegations, and the rest of the world's not too impressed with us with that. We also, and what we're, I actually don't want to go down that that rabbit hole too much. But it's been a real, there's this rising geopolitical tension. We also saw something that's happened in Taiwan, which is quite a big thing. The Taiwanese, I suppose, people elected a pro-US president, and
which now, of course, is going to affect relations with China.
Well, we'll see, right? We did see the US come out and say, look, they acknowledge that Taiwan is the territory of China, but nonetheless, there's more and more and more military presence growing in that area. So we've actually looked at that situation and said, well, look, let's have a contingency plan, because this is smelling very similar to what it did in Ukraine, where there's just more and more people piling up on the border. At some point, something happens. So let's at least have a plan for if it happens. Rather have a plan and it doesn't happen than not have a plan and it does happen, right? So there's that, and there's obviously this situation in the Middle East that's getting even more, heated. Which is driving the gold price up, which is driving sort of volatility up. And we will dig deeper into that. So it's a very strange time to be a participant in market. This is getting stranger and stranger. And I think that, we also have the overarching narrative of US interest rates. What is going to happen? Are we going to start seeing a cutting cycle? When is that going to happen? What is the language from the Fed like? What is the Fed's next move? And all that uncertainty coupled with coming out of the holiday season has made for sort of thin markets, sluggish, which and because there's not a lot of volume being traded, the markets are generally overly volatile as well. So if we see the top 40 today down over 1%, really on very, very little volume traded so far.
So just with the top 40, would you say that is a buy if you're kind of looking?
Yeah, I would actually.
Buying an index.
I think that, to me at least, the top 40 index at this stage is a buy. I think there's a nice sort of risk-reward setup. Look, if you're looking at trading the Aussie at 10 Rand a point, it can be sometimes not for the faint-hearted, right? The stop loss is 1,000 points lower, and the take profit is like 3,000 points higher, right? But I think that there is a long opportunity in the index at this stage, as well as in some of the gold counters, which we'll look at.
I'm just in the top 40. Of course, it's quite diverse. There's SA Inc. and then there also the offshore counters. And SA Inc. has been battered. quite a lot, to the point where even towards the end of last year, we saw JSE darlings like Bidvest being hit by negative sentiment as it missed expectations in their last business update. And I'm wondering actually, how is SA faring compared to the other counters that are...
Look, I think we're still
offshore,
sort of biased China tech and biased commodities, which are two things that I think are good to be biased towards.
Yeah.
I think that, this is, I think, something that we've probably been saying for a long time and have yet to be right.
Yeah.
But US tech has really run much, much harder than Chinese tech.
Yeah.
And, there's a lot of things that people might not necessarily agree with China, but there's a lot of things that they do right, to be fair. One of the things they did, for example, now recently is, and again, this put quite a bit of pressure on Chinese tech stocks, was a changing regulation around with the contents of video games, where you have this chance roll where you can get a reward, but you've got to buy the tokens with real money, and then it's like a gambling type mechanic that they build into this thing. And China just says, no, we're selling these games to kids. You will not put that in there.
Yeah.
Great move, China. That's something that I really think is very positive. Unfortunately, you look at the video game industry, it wipes out billions of dollars of market capitalization instantly. But you know what? To progress humanity a little bit, I think that's probably a good thing. So I think that we're entering into a space where Chinese tech is starting to look more and more and more attractive. They've really been hammered down. They've really put the hammer down hard on regulation, and they're forging a industry that's going to be more sustainable and less harmful to people, right? And I think that Chinese tech is looking very attractive. So from our perspective, with the heavyweights of Naspers and Process on our index, for example, I think that's great news. The rest of our market has, I suppose, shifted back into the commodity space. For some time we moved away from it, but we're very heavy on commodities again, and I think that is probably...
So maybe they found the bottom.
Yeah, look, I mean, it's cyclical. The index kind of keeps the biggest companies in it, and at some point the resource and commodities companies fell out, and now they're back on top.
Yeah.
And I think that is well positioned as well. I think particularly the gold miners are going to do relatively well, as well as sort of the more diverse industrial metal miners. So.
Yeah.
Like Anglo's, Glencore, those guys I think are well positioned to do relatively well. I think this is something I think we spoke about last year quite a bit, where we have this theme where we have diverging monetary policy. The Chinese are doing everything they can, or let's call them the BRICS nations, are doing everything they can to stimulate the economy, as where the NATO nations or the Western nations or the US is doing everything they can to kind of slow down their economy.
Yeah.
So I think that resolves itself in a bit of an economic boom in the East. And we're well aligned with that, and obviously we sell commodities, so people want to build things. Hey, they come shopping on our door.
Well, you spoke about geopolitics earlier on, and of course you mentioned gold and the volatility that we could see. And I'm wondering what investors are hanging their hat on right now, as they're looking at buying, getting into gold or gold stocks, because obviously interest rates are still elevated. As much as we're expecting cuts, that also we're not sure of the timeline.
Yeah.
But also, are we also hanging our hat on the fact that geopolitics are still quite a significant thing, so we can expect people to rush to safety when it comes to gold?
To an extent, yes. I think, there's multiple layers to your question, right? So there's the geopolitical tension, global conflict getting worse and worse and worse, and risk of recession, all these things. I want safety, rush me to gold.
Yeah.
And then there's the other thing of, well, interest rates are still high. That means gold is still acting as an inflation hedge. Once that inflation hedge need is gone, does gold stay lofty? So I think that's a good question, because if you look historically, what happens in the economic cycle, when interest rates begin to come down, recessions start.
Yeah.
Right? That's just how it's been since the central bank has been around, as 200 years or so. And I don't think that changes this time. And as much as we always talk soft landing, soft landing, soft landing, maybe this time it's never happened. I doubt it's going to. There is one scenario that I do think maybe markets just turn tail and absolutely run, and that is if a Democrat president, and you're not going to like this, if Trump wins the US election.
Gosh, I saw an article.
I think the markets will charge forward if that happens. Probabilistically, I think you'll probably see a Democrat. I mean, sorry, a Republican.
Yeah.
I don't think it'll be Trump. I don't know. We'll have to see. But I think that's the one outlier where we maybe see, look, you know, markets just absolutely charge and the U.S. economy expands like crazy. Until then, I think if we really are on track for interest rates to come down later this year, maybe even as early as late or early second quarter or late first quarter. In that scenario, generally that's a good time to start buying copper and other sort of harder commodities. And we start seeing two things. Commodities start to rise, but general economy starts to slow down. So one leads the other quite a bit.
Let's take a look at the chart for Gold Fields because as we're talking about gold, you're looking at Gold Fields as a buy. And I mean, this is one of the counters that are driven by the price of gold mostly. But also, there were a lot of kind of operational or strategy movements over the last 2 years, 1.5 years. Of course, we even had a change of guard over there. So why this particular counter? So
look, I mean, this is more of a technical trade than anything else, to be honest with you. I think you can see here I've left the levels in the last time we chatted about this, and it was kind of a short trade below this blue line. It managed to bounce off of this trend line, which, as you can see, has been in place for quite some time. From where I stand, we have gold sort of trading at or near record highs. My opinion is that we probably see gold within the next 2 or 3 weeks break out into record high territory, maybe even touch $2,100, if not higher. In that scenario, I think obviously the gold stocks, the gold miners have to run, right? And it seems as though a lot of these gold stocks have been a bit lagging behind the gold price, right? And also, if you look from a sort of technical analysis perspective, our stochastic oscillator here has made a lower low, while our price over the corresponding period has made a lower low as well. So that, to me, looks like a little bit of bullishness starting to creep in here. We have this low here and that low, so those are two lower lows. Let me draw them in for you, actually. Otherwise, I'm just saying lower lows sounding like a madman.
There we go.
Without any real reference, make it nice. And
there we go. We are seeing that.
There you go. And we'll change color here to make them sexy pink. Okay, cool. So that is a downward sloping little trend line over there if we connect those lows. And this is an upward sloping trend line if we connect those lows, right? So that is a sort of reverse bullish divergence, if you will, you know, bear with the names these things have. Some of them are quite crazy. So that's generally quite a bullish sign. We seem to be stuck underneath this 89-day moving average at the moment, but I think once free of that, we've got a good chance of coming back up and testing 300. So we've got a decent little risk-reward setup here where we can enter a long trade here, sort of below 250 Rand a share. And we can put our stop loss at, say, 225 or 222 Rand with a take profit at 300. So we're looking at essentially risking 25 Rand to make 50, a 1 to 2 risk reward. It's a decent trade. We'll probably be in it for a couple of weeks.
All right. Let's move on to MTN. As you're talking about risk reward, obviously we know that they, you know, shed off their troubles in the Middle East. By divesting out of there. Of course, still some few things left with some of the operations there, but focusing on Africa and Nigeria being a very big contributor of their profits. But of course, they're still experiencing challenges over there. You know, that part of the business has continued to hurt the stock. What do you make of this? Do you think that it's discounted enough because of Nigeria for this to be a good opportunity?
I mean, I think Nigeria is always going to be a problem. to be honest, I think a lot of the sort of how am I sensitive around this? The hyperinflation / hypergrowth economy. So you've got two things happening in Nigeria simultaneous's. Inflation is really killing them because it's a deep peg, the Naira and all that kind of stuff. But they also have an enormous population that is. And their economy is growing very, very fast, certainly faster than ours. And I think that what we have there is a situation where these countries are, you know, we've seen it time and again in other African countries. They're looking at foreign companies coming in and making an absolute fortune in their countries and taking all the money out. And they're saying, well, look, we want you to keep the money here, and we incentivize, we create all sorts of different incentives for you to keep the money here and reinvest it in our economy. And if you don't do that, you know, we'll find interesting ways to persuade you that this is the way to do it. So you know, from their perspective, absolutely the right thing to do. From MTN's perspective, man, it's getting expensive, right?
But I mean, it's worth it.
But it's worth it, I think. So I don't think that's too much to worry about. I think we probably see Nigeria grow relatively well and continue to grow relatively well over the next couple of years.
That chart, what do you see?
Yeah, what we have on the chart here, however, and this was actually pointed out by somebody in our client community, so kudos to them. It's maybe not the best drawn chart in the whole wide world, but what we have here is the makings of a bullish flag formation or a bull flag formation. So there's a couple of things happening here. One, I think we spoke some time ago about the importance of moving average crossover. So we're looking at a 20-day moving average, which is our green line, and an 89-day moving average, which is our orange line. So we have this crossover, which is a sort of bullish indicator as a potential buy signal. We can see sometimes it doesn't always work, but sometimes when it triggers you, it gives you beautiful long bull runs like that. So you have to sometimes take a little bit of whipsaw before the real signal comes. So we've had a few sort of fake signals now. We have another one. Will it be fake? Will it not be? Time will tell. If we are systems traders, we must take every trade where we get a signal. So that would be a reason to take a long here, firstly. And the second is that we have this potential sort of bullish flag formation that's breaking out. And if we sort of read the target on that, we're looking at about 130 Rand a share on MTN. Again, this will take, I mean, if you just look at, if you use time as a measure, we're looking at sort of end of February that this potentially might reach target. And we can look at a stop loss at, say, 108 Rand a share, or even we can give it a bit of time, a bit of space to 107 Rand a share. So it's not, a massive amount of risk that we're taking to get to 130 Rand a share. So we're looking at potentially 20 Rand upside for like 4 Rand downside. That's a good risk reward, right? It's like 1 to 4. So that seems like a decent trade to me.
Okay, well, thank you so much for kicking us off for this year with the technical analysis of the top 40, MTN and also Goldfields. Really appreciated. Petri, that was founder of Henrenya Capital, Petri Redelinguys, with this week's trade of the week.